What's up, guys? Welcome to Roensch Capital Charts. Today we're taking a look at Nvidia stock, ticker symbol NVDA, on a variety of time frames in anticipation of the next trading day, Monday, March 18th. Alright guys, Nvidia stock here on Friday finished the day down $1.07 per share. That's minus 0.12%, essentially a flat day here out of Nvidia. It's one of those kind of volatile flat days, if that makes sense. So let's take a look here. The stock is currently up as I'm filming this in the after hours on Friday. It's up about a little over a buck per share in the after hours. Listen, of course, as always, from a bull, I'd rather see it up than flat or down. Of course, this is essentially flat, but as always, we have to take that with a grain of salt. Volume is incredibly low in the after hours. It's really easy if we see any extra movement out of this by the time you're watching this video. It's extraordinarily easy, even with big blue chips, to dump off stocks, pump stocks, just bully stocks around in the after hours. The order book thins out substantially. But let's get started here, and we will start with our daily ritual, our volume profile analysis here on the 5-minute chart. Try to pull out some bias that we can't see simply by looking at the price movement. So I need three things here when we're looking at this. I need obvious changes in volume, 1. 2, those changes in volume need to correlate with obvious moves in stock price, which we're going to circle here in a second. But number 3, and this is the one that most people overlook when trying to do a volume profile analysis, it can't just be big volume or small volume, right? It has to be outside of the context of what is typically expected for that time of day on any average day. So if we take a look at Nvidia here today, it was really interesting price action. We have almost kind of like a plateau here. Right, so really what I'm interested in, that kind of pump upside move off the open that we got, and then this fade that we saw into the close, making today essentially what became a flat day. So let's take a look. Now, here's what we're going to do. We're actually going to briefly cut out that first after hours bar so we can get a better look, and then we'll come back to that and discuss that when it comes to that time. So, as is contextual, that first 5-minute bar off the open, or really the first bar on any time frame, is likely to be the highest volume bar on many days. We saw nearly 3 million shares traded off the open. And if we actually look at the candle that occurred on, it essentially ended up being just a slightly red, what I would call long-tail doji. Okay, it was a battle in between buyers and sellers. The buyers pushed it up, the sellers pushed it down at some point during that 5-minute bar. And really neither came out on top. The bears came out just barely on top before the bulls took over and took this thing higher. So although we did see nearly 3 million shares of volume on that bar, the reason, in my opinion, why we're seeing so much volume on that first bar compared to the ones that follow, rather than what we typically expect, which is kind of a quick fading off into like a U shape, is because we were seeing such a battle, both buyers and sellers going head to head, pumping up that volume with very little change in stock price by the end of that candle. So I think we can kind of just ignore that first candle entirely and look toward this upside move. Now, really the only thing we have here are these 4 consecutive green bars, and truthfully, if we're going to remain unbiased here and actually, be productive in this video and not just try to confirm our bias, that volume is well within context. Had we seen these 4 consecutive bars, which I do like to see, up at, 1.25, 1.5 million shares per, across with all 4 here, with a little bit of variation, but that would stick out like a sore thumb. That's just not what we have. This is relatively contextual. We had that one last bar pop, but I mean, I like to see more consistency than that when we're looking at the volume profile. Otherwise, it's kind of a fooled by randomness like effect. Now into the close. Remember, this was a downside move here. Okay, and we're just cutting out that first after hours bar, which we'll look at here in a second. So bears, you're looking for big volume that sticks out, that is outside of the context is what is expected for that particular time of day, which is heading into the close. And honestly, this is very, very contextual. This is a very contextual ramp up into the close, something that we see nearly every single day. There's nothing out of the ordinary there at all. So truthfully, the intraday volume profile is kind of a wash. I'm not seeing a tremendous amount of bias from either side. And by the way, just so you guys kind of fully understand what I'm looking at here, it's so that, we can actually get what I'd like you to get out of this part of the video. You'll oftentimes find as you start doing this on your own, if you don't already, I'm sure many of you do, that the volume profile itself and the end result in terms of percentage gain or loss, or if the stock is flat that day like we're seeing on Friday, it's actually relatively common for them to not be correlated, which is really interesting because if you have a flat day where the price doesn't really give you a lot of bias, it's common that you may see heavy bullish or bearish bias in the volume profile, which then gives us something. Today we're just seeing a flat stock and kind of an unbiased volume profile. But also, for example, if we were to see like a big red day, okay, like a 6% red day, but we look at the volume profile, sometimes it's really interesting. You can actually pull out some what seems to be heavy bullish bias out of a day like that, or vice versa, with a big green day and bearish bias, and that gives us a different perspective on the day. Now, I agree with you, at the end of the day, the price is what matters, because that's how we make money, but more information, at least when we're looking at real stuff like volume, right? More good information is never going to make you worse. All right, now I know some of you are likely to have questions about this big red candle immediately after the close. Okay. Now that red candle itself on the chart was medium sized. All right, we held that off though in hindsight, but if we look at this, this is my experience with this, okay? And I've explained this in a couple of other videos, but incredibly common on blue chip stocks, and I've been seeing it massively as of late. Okay, that first 5-minute bar after the bell, we tend to see really big volume, and I firmly believe that this is simply institutional and fund rebalancing. Buys, sells, rebalances with big volume coming from funds and institutions. Likely a lot of it is being done through algorithms, okay, to trigger after the bell. And then it's really common that we see that big giant volume bar right after the bell rings. So the fact that that bar is red to me is actually relatively meaningless, okay? But let's move on here and start taking a look at our psychological self-fulfilling prophecy levels that I'm going to be paying very close attention to here come Monday. Now, in Thursday's video, if you caught it, by the way, listen, if you haven't done so already, please subscribe to the channel. My goal is to hit 5,000 subscribers by market open this coming Monday. So I greatly appreciate you jumping aboard. And let's take a look at this this level now on the 30-minute. If you caught Thursday's video here on Nvidia, we were talking a lot about these really commonly used moving averages, as we do every day. You have the 50 period and the 200 period, all right, which we had given up both of them officially as of Thursday. But the 30-minute chart can change quickly, right? These are quick moving averages, really, especially the 50 period. It's the quickest moving average of the 6 that we're going to take a look at here on the most popular charts. But the fact that it is so contextual and so heavily watched, making it so psychological, makes the 30-minute with these two moving averages the most popular ones, right? The 50 and the 200. It makes it such a great candidate to look at day to day because everybody's paying attention to it, everyone's watching, and it can flip inside of a single day. So here on Friday, we actually reclaimed that 50 period for a good majority of the day here. You know, we rejected it in the pre-market. That's fine. Volume is very low. We claimed it on relatively sizable volume. We made a retest of it, a lower volume retest. The pull away, it happened to be during the lunch hour. Now, you guys know, when I'm looking at a chart, honestly, on like any time frame, this is a setup that I scalp consistently on in-play stocks on a 1-minute chart, little pull-ins to like a 9 EMA on stocks that have a big majority of human traders, where that kind of setup actually has quite a bit of edge. By the way, if you'd like to get my scalp setup alerts, my in-play stock setup alerts, swing trade setup alerts, unusual options activity, and potentially platinum one-on-one coaching with me, take a look at that link in the pinned comment. I'm in there working with members pretty much all day, every day while the market's open. I started that group over 3 years ago, and just so you know, the monthly cost, it does go up over time. However, whatever price you join at is the price that you'll stay at, okay? So you can get grandfathered in, essentially, at whatever price you join at. But don't get me wrong, you can absolutely learn all of this stuff for free. That's what I did. It just took me probably a little bit longer than I would have liked, and I probably ended up paying it anyway. I know I did. My tuition to the market just from having to learn how to find edge myself. really without much guidance. But this kind of setup here that I'm looking at on really all time frames, again, that higher volume breakthrough, the low volume retest, and then what I like to see is high volume confirmation on the pull away. Okay, this is both a bullish and a bearish setup, depending on how it sets up, of course. But the problem here on Nvidia today, as far as I'm concerned, is that pull away happened to be right in the lunch hour, and volume kind of faded, right, as is expected. The time of day is likely to take precedence when we're looking at this on like a 30-minute chart over a 1-minute chart, where we can really look at the nuances of the volume changes. So that time of day, the fact that it was lunch hour kind of took precedence over that being a higher volume pull upside toward the 200. And what I thought was really interesting is we got that hold. The volume wasn't perfect, but we slowly pushed higher to that 200 period and then faded hard and broke the 50 period just before the close. Okay. Now, is that significant? Well, you guys always know what I say, right? I want to see something that breaks, whether it's downside or upside. I prefer to see that hold throughout the majority of a trading day. And as we get more macro, like the 4-hour chart, the daily chart, really I'm looking for like 1 to 3 trading days holding that level, that break. So bears, yes, we gave up the 50 period moving average here on the 30-minute chart, and we're of course holding it after hours. Again, take after hours with a grain of salt. But it was so late in the day, and I very commonly say this to both bulls and bears when this kind of thing does happen. You have to take that break with somewhat of a grain of salt, because there was very little opportunity for a big sample size of the market to come in and really make that definitive statement that this is what we're doing heading into the weekend. That break was really a result of that kind of on a whim late day downside fade. Okay, so come Monday, here's what I'm really looking at on the 30-minute chart in particular. Bulls, I want to see a reclaim of this 50 period. Okay, I would love to see a repeat of what we actually got today. However, have the pull away be on higher volume, enough to push us up through for a reclaim of the 200 period as well. Currently, we find ourselves approximately 1.75% away from an upside test of that 200 period. So I would love to see an upside break of not only the 50, but also the 200, and then hang out above there for as much time of the day as possible, which kind of sets us up right around 900 bucks a share as well. Bears, for you guys, you're going to want to make more of a statement than this late day break as far as the 50 period on the 30 minute is concerned, right? Any upside test, like off the open, for example, like we got here on Friday, you guys would love to see a hard, high volume rejection. Make that really clear, okay, that a big sample size is looking at this, which we already know that this has eyeballs, and we're not ready to reclaim it, at least in the very short term, right? Context of the 30-minute chart. Big, high volume rejection. So bulls, that's what you would not necessarily want to see. Bears, that is what you guys would want to see. And then to follow that, bears, you guys would love to see this 50 period continue to curl downside at an accelerated rate, get an additional psychological barrier as low and as close to the lowering stock price, the falling stock price, as possible. Kind of add another psychological ceiling. Right above it, the lower it goes. All right, now let's move on here to the 4-hour chart and take a look. This is highly contextual here as we head into the weekend going into Monday's trading day. You can see that we're in a similar spot that we were Thursday night. Okay, just cracking below the 50 period here on the 4-hour chart, which again is an extremely common indicator. The only reason I'm interested at all, right, that self-fulfilling prophecy psychological approach to TA. So this 4-hour chart becomes really simple for both bulls and bears come Monday. We're very close. Bulls, just for example, we are approximately 0.5% away from an upside test of that 50 period on the 4-hour. So bears, let's start with you guys since we are currently sitting below. It's a little more simple for you guys. Any upside test at all, again, hard, high volume rejection. Right? That's really all we're looking for if you're a bear. Bulls, ideal scenario, and this is well within ATR. It's a 0.5%, right? It's well within ATR for Nvidia. That's average true range, by the way. Bulls were looking for a big upside break on as much volume as possible, right? You know, you could keep going. Me, I actually prefer an upside break on big volume and then a retest. I like confirmation. I don't like leaving anything up in the air for for example, in this case, if it's an upside move, for a bear to come in and say, hey, you know, we need this to occur. We didn't actually confirm. I want none of that left up to the imagination. So really, I'm looking for a big upside break through the 50 period on high volume, as little volume as possible on a retest. And then as soon as the pull away begins, as much volume pouring back into the stock as possible as we head up toward or through 900 bucks a share. Okay, which brings us to the daily chart. This is by far the most important. If there's one chart you don't skip, right, when you're studying up for Monday's trading day, do not skip the daily. This is the most psychological, the most contextual, and has the most eyeballs all around the world. Now, being the daily, understand that we're not going to see any little after hours movements, so this is simply on the closing price. That's fine, since we're taking after hours with a grain of salt anyway. Now, the story here becomes really, really simple, because you can see that the moving averages, completely irrelevant, not interested, right? The closest one is the 50, and it's at 700 bucks a share. So the story, we want the most simple one available. It becomes the psychological round numbers, and which ones are the most relevant as we, head into Monday? Well, to me, it's 850 and 900 bucks a share, right? And we know that 900 was right after a couple of those moving averages that we were looking at earlier. So bulls, really simple. Come Monday on the daily chart, the most contextual story that we could possibly look at. Here's what I'm looking at. Any downside test of 850, I want to see a big hold, ideally on high volume. Any upside test of 9, this is the primary objective come Monday if you're a bull. Make an upside test of 9 on big volume, break upside through. I would love, after that occurred, to see a lower volume retest of the psychological whole number. I don't mind if it dips to 899, 899.50. It's a higher price stock, right? We're going to see, it's never the exact penny, right? Stay contextual. But just a lower volume retest, and then boom, right? A high volume pull away. Very definitive. Yep, we're breaking and holding 9. The higher volume, the better on that pull away. Now, bears, you guys, come Monday, any upside, and bulls, this is what you would ideally not want to see. Any upside test of 9, if you're a bear and 9 is currently your enemy, you want to see a big high volume rejection off of 9. Okay, and the high of today was 895.46. So bears, you guys would kind of want to see a repeat. Any upside test, you're going to want to see a big high volume rejection, with your primary objective being a break downside through 850, a retest on low volume, right? High volume on the break, retest on low volume, high volume rejection there, kind of claiming 850 as a short-term area of resistance. And by the way, I don't mean for 7 minutes, right? Please don't take that out of context. We're on the daily chart. So I'm looking for as much intraday time spent below or above, whether you're a bear or a bull, above those levels or below those levels as possible. As much time as possible with as much volume, as much sample size coming in as possible, making that break more definitive. Now, really quick, what I think we should do, let's take a look at the short data, the short interest data here on Nvidia. You can see it's that orange line. Okay, this is the Ortex data. And you can see since the beginning of the year, we've seen a slow rise. Nvidia is not an incredibly heavily shorted stock, likely for good reason, right? Based on their recent earnings reports. But it has slowly been on the rise as Nvidia has moved higher. So whether you're a bear or a bull, you could look at that a number of ways. Bears, you might look at that and say, okay, I like that I'm having some more peers climb aboard on the bearish train, betting against the upside move. Or bulls, I know a lot of bulls are looking at this and saying, bring it on, that's just more fuel on the fire. Nvidia will squeeze them out and just add more fuel to that buying pressure. Number of ways to look at that. And by the way, guys, Ortex is an absolute world of data. Every stock that I look at out of personal interest, I utilize Ortex to dig through everything. If you'd like to have that for yourself, or maybe get that for someone in your life, you can get 10% off at the second link in the description if you use code Roensch at checkout. That'll give you 10% off. And by the way, just to be clear, I was a paying customer of Ortex for years before I ever got into contact with them. And I paid full price, so I think it was worth it, at least to me. All right. Now, implied volatility. Let's take a look here. Implied volatility is going to be this blue line at the bottom. All right, it's, you know, it is down in the past couple of days a little bit. It went up a little bit here on Friday, essentially flat. Again, the higher IV goes in relation to your intended trade time frame, the higher the potential for IV crush if we were to see implied volatility head back down toward equilibrium. Okay, so just keep that in mind. Take that into your risk profile. Now, time for my personal favorite part of the video, and I know a lot of you guys as well. Let's take a look. What was the options bias out of the traders just here from Friday? Okay, all of this volume was just from Friday as they position themselves heading in to Monday. So we had 1.96 million total contracts traded. 1.18 million of those were calls, and 778,000 of those were puts. Now, if we break this down by time frame, okay, delta range, there's so much data to be had here, and it's so often overlooked. Every single delta range here is leaning call heavy. Okay, that's out of the money, at the money, and in the money. On average, that's going to be the short-term speculators. That's 0 to 20 is going to have the highest concentration of like short-term gambly style, short-term speculators, right? And then you have the 41 to 60. Those are going to be those at the monies. That's on average going to be the more midterm sentiment. And then the 81 to 100, those are those deep in the money. A lot of those are going to be leaps. Those are on average that longer term sentiment. So you can see the ratio there as well. The very short term is a little bit more undecided, but still leaning call heavy. Okay, 456,000 calls and about 420,000 puts. The deep in the money, less so, but understand the volume is going to be lower because those contracts are more expensive, so people naturally buy less. You have 95,000 calls and 24,000 puts in that deep in the money, longer term sentiment. Listen, before you head out, please leave a like on the video, help push it to a few like-minded people. And also, don't forget, please leave your vote in the comments section every single day. Leave your vote for the stock you'd like to see me cover on Monday as Monday's wildcard stock. Whichever ticker gets the most comments over the weekend's batch of videos will be the stock that I cover as Monday's wildcard. I appreciate you guys. If you got value, please subscribe to the channel, and I'll see you in the next one.